Hello and thanks for tuning into the channel again. This is the ASX and Sectors weekly chart analysis for the week ending 30th of December 2022. This is the S&P ASX 200 index. The XJO is the ticker code. And this is the last week of the trading year. The new week starts next week. This is often quite a insignificant week. There are times when the market does break out or break down during this week. It's perhaps rare. Generally, we see quite low volumes and insignificant trading. This week was effectively a test for supply sort of bar. It was a narrow spread down bar. It closed in about the middle. It tested the lows of the previous bar, but closed back within its range. It really wasn't a significant bar at all. The volume wasn't significant, and it's likely that this was more really just holiday trading. These are the important levels on the chart. This is where the real breakout level is. A push above this level would see price in clear air. It's currently trading adjacent to this level and turned over, and now it's just consolidating. I expect price would find increased support within this range here if it needed to come down to this level. At the moment, price is moving reluctantly lower. It's not really accelerating lower. The last three bars, this was a narrow spread bar on an increase in volume. That looks like it was an attempt to support the market. The next bar pushed lower but closed up in the top half of the bar on reduced volume and below average. Selling pressure was only modest, and there was an attempt to support the market. And this week's bar was really a test for supply on very low volume. So the market was drifting lower with no serious intent being shown. Next chart is the mid-cap sector. Now, this chart's a little more compressed than the parent index. You can see a similar thing. 3 weeks ago, price pulled back on increased volume, but still closed within the range of the previous bar after testing its lows. Last week, volume reduced and the bar closed in the middle as a modest down bar. And this week was a test for supply on very low volume. Quite a narrow spread. It wasn't a significant bar, or it doesn't appear to be a significant bar at this stage. Next chart is the small ordinary sector. This sector has been trading weaker than the previous two recently. Spread was a little wider and volume was a little higher in this market. So there was some trading going on. Price has come back to this level and is testing the breakout for strength at the moment. And at this point, the close off the low that tested this previous breakout line suggests that there is some support in the market. We'll see what the response is next week. The response should tell us whether this was a significant move or not. The financial sector did close below this low this week, which may prove to be significant. We'll see. Here's the important highs of the range. A break above this would see price in clear air. At the moment, the market is effectively consolidating sideways. These two bars here were stronger than the overall market, and we saw a test for supply this week on extremely low volumes. So I would suggest this wasn't significant trading. This was holiday trading. This is the miners, metals and mining index. Now, this is the first chart that's actually more interesting. In the past, we've had some accumulation, which I've pointed out previously, and a serious gap out and push higher. This is your accumulation. This is the cause. This is the effect. This is a serious push higher. And you can see that this is where the resistance is coming from at the moment. The market pushed up into it. There was no serious attempt to push through it. Prices come back to consolidate. And this week saw price just dip below the previous bar's low, but recover to close just within its range. Volume was perhaps higher than some of the other markets, but still below average overall. This was an absorption bar, I would suggest. This was the market consolidating in response to this big push higher. Here's the push higher from here to here, and here's the period of consolidation at the moment. And we'll see how it goes. Generally, the higher up the range the consolidation takes place, the stronger the underlying sentiment in the market. And at this stage, it looks like the consolidation has taken place fairly comfortably. This is the ASX gold sector, and this market is similar to the miners, where there's some accumulation in the recent background, which is forming a cause, and here's your effect. Now, this market gapped out in a similar fashion to the miners and accelerated higher. Little test for supply there. Price pushed up. There's the breakdown line previously, and the resistance is likely to last up to that level. So that's the resistance zone. You can see prices just touched this zone and it's pulled back. This was your classic absorption bar this week on fairly low volumes. It actually closed higher for the week. Narrow spread up bar. It closed poorly, but comfortably within the range of this previous bar. Here's its range here. Slight push out the top and closed back within its range as an up bar for the week. Lovely absorption bar. And this market is looking like it would like to consolidate just below this resistance level. And perhaps if the overseas market continues to move higher, you'll see this market push back up and into this level. And this is the energy sector, which hasn't been trading very clearly recently. I've suggested this market's not trading in harmony, or the constituent stocks have not been trading in harmony. It's looked like it was going to break out more than once and hasn't done so yet. Price this week, it attempted to go higher, but ended up closing lower as a down bar, but within the range of the previous bar. Volume was very low, so we'll call this an absorption bar. It's perhaps a bit awkward, this bar, another awkward bar within an awkward market. You can see price attempted to absorb its way out here, but eventually broke down again on this bar. And it's not a serious or clear breakdown, but it was a breakdown out of this absorption pattern where price was trying to move above the highs of the range here. When these stocks all start doing the same thing together, they'll either break down seriously or break out seriously. But at the moment, you've got all these overlapping bars. It looks like there's been attempts to accumulate in the past. Here, all of these buy the offer bars. These two together are a buy the offer bar. Price pushed up, failed to break out, and price pulled back in response. But this looks more like more people just wanted to jump in the market. There was buying on this bar. There was likely buy the offer on that bar. It's just an awkward market with no serious trend in either direction. The ASX healthcare sector. This was a perfect and textbook test for supply this week. Test for supply is a narrow spread down bar closing mid to high on low volume. And you've got a narrow spread down bar closing high on low and well below average volume. This was your perfect classic test for supply. And if we have favourable trading conditions next week, I would expect price to attempt to move higher in response. You can see this market has also had some opportunities to break out previously, and has failed to do so. It's been a little disappointing as well. We'll see what happens in response next week. It'll need favourable trading conditions next week to push higher. This is the serious level in the market where the price would break out, and there's only a minor older level here. The last chart is the industrials, who have also failed to break out a number of times recently. You've got all these times. This is a weekly chart, remember, over effectively the last year, where the market's had an opportunity to break out and has failed to do so. Now, price pulled back substantially this week, so this may be perhaps a substantial chart to take note of. Volume was very low, so that suggests there was hardly any buyers in the market, and the sellers that did emerge forced price to stretch lower to find enough buyers to satisfy the sellers in the market. There is an inside gap just here that may be worth watching. Price hasn't quite reached it just yet, but perhaps the market's coming back towards that level, and there's the level of the reversal here. So they all work together here. You may have price moving back into this level. We'll just have to see what the response is, but this week some supply did emerge. There was not enough buyers to absorb that supply, and that forced the market to stretch lower in an effort to find sufficient buyers to satisfy the sellers. We'll see what happens in response next week. Volume was low, so the activity was actually low. It was just some selling came in and more than the market could absorb for the week. And just quickly, back to the parent index, which traded on very low volume this week. Narrow spread down bar, tested the lows of the previous bar and recovered back to close within its range. It really was an absorption bar. It was a test for supply. The market has moved lower now for 4 weeks in a row, but it appears to be moving reluctantly lower. It doesn't appear to really want to move lower. Really, if there was heaps of supply in this market, it could have accelerated lower and at least come down and tested the highs of this reversal bar within this range here, but it hasn't done so. It's moving reluctantly lower, mostly in sympathy with overseas markets who are also been moving lower. Okay, that's my lot for the week. It is a shortened trading week. It was likely for most markets not a significant trading week, and we start the new trading year next week. Thanks for your time. Thanks for viewing my charts this year. I'll be back again next year. Thanks again. See ya.